TJ the Wheel Deal coming at you live with this special edition of Wheelers. Guys, we grabbed the bag. We legit grabbed the bag on Sofi. So I want to talk to y'all about the genesis of this trade, the origin story, if you will. Like, how did I get to a situation where I was willing to risk it for the biscuit, right? Or in Texas, as we say, risk it for the brisket. It all started long time ago, right? So Chili Peppers song, "Before the Rain, Before the Snow." We had 150,000 shares of SoFi. When we were in Robinhood, we had 150,000 shares of SoFi. We transferred those shares over to Tasty Trade, 150,000 shares. So I was like, I don't want to own that many shares in this account because we're just tired of the drawdown. We're tired of the drawdown. We had 150,000 shares of SoFi, 150,000 shares of Riot, like 10,000 shares of Amazon, and a few thousand shares of Tesla. That's what we transferred over to Tasty Trade plus several $1,000,000. So I was like, what can I do differently? What can I do differently? I knew that you could sell naked calls and naked puts on Tasty Trade. I didn't know to what degree, though. I was new to the platform. So once I started figuring out that if I could play a supersized strangle, if you will, I called it the SoFi massive strangle. It's all about the deltas. It's what would emulate owning 150,000 shares, or let's not even call it 150,000 shares, 100,000 shares, because I had every intention of downsizing the position to 100,000 shares just because 150,000 felt out of balance, if you will. It's kind of weird, right? But some people are like real skeptical with numbers and whatnot. I'm kind of one of those people. So I was like, I'm going to downsize this position to 100,000 shares because I want to have more options available to me. I want to have more money available to me to go play somewhere else because the premiums on SoFi were kind of dying down a little bit at the time. So I landed on the strangle on SoFi, and I started with 5,000 contracts. So what I'm going to do is I've utilized Grok to basically pull all the screenshots for the last 90 days on the strangle. And I want us to learn together because I feel like there's things that I could have done better. You know, we ended up at like 1.5 million. Whenever we started the strangle, our year to date on SoFi was like negative 200,000 because whenever we rolled the position from Robinhood over to Tasty Trade, it showed this massive loss. That wasn't really true, but it was like, well, SoFi used to be trading here and now it's trading here. So you lost all this money. So on paper, that's true. We lost value, but we never like bought the shares up here and sold them down here. So I didn't really like think that the accounting was accurate, if you will, because it's showing like negative year to date on SoFi as if we lost money, but it's just we had a drawdown. You know what I mean? So anyway, I was like, okay, well, cool. Well, I'm determined to make it positive. I'm determined to make Amazon positive. I'm determined to make SoFi positive, Riot positive. I don't know that I'll be able to make Tesla positive because those showing a negative. They're all showing negatives because during the transfer, there was a big drawdown in the market and we weren't able to do anything for like 4 or 5 weeks, right? This transfer was a little bit complicated initially because, you know, we thought Robinhood was just going to give us a check for all the money. And then we're able to do the ACAT transfer and whatnot. So that worked out great. Shout out to Robinhood there for doing us a solid. They probably didn't have to. We didn't part in the best of terms, if you will. So anyway, that is what created this journey for me, is like kind of like transitioning from TJ the Wheel Deal to TJ the Strangler Wrangler, right? It was just like I want to have the same exposure to the stock, to the underlying, as I would with 100,000 shares, but I want to play it with strangles. I want to play the range game because I was in the mindset, and I still am, that the market is extremely frothy. I was in the mindset that things are extremely overvalued. I just bet them, baby. And I don't want to own a bunch of shares because I don't want to own Palantir at 150, whatever it was at the time. Especially don't want to own it now either, but I'll strangle it because I feel like I can play the range game. I can play the range game at these levels. That's what's comfortable for me. I'm not comfortable owning a bunch of asset classes that I think are extremely overpriced right now. So I was like, okay, let me find another way to make money. So that is how I decided that selling puts and calls and rolling, that's my specialty anyway. And if I'm able to do that without actually having to own the underlying, unless push came to shove, because it's important to have the money to cover, I was like, I'm home. And you can talk to the trade desk a couple times with Tasty Trade, and they're like, welcome, welcome. Just know what it is you're signing up for, right? They've been very, very clear. We're going to give you a lot of rope. You can have portfolio margin, all of these things. It's awesome. It's awesome. It's a lot of rope. But sometimes people hang themselves with that kind of rope. So you got to be careful. You have to be mindful. You have to be mindful. So anyway, let me do just a couple of shout outs here. What's going on? Shamu, afternoon. Great play on SoFi. Like the greatest heist. You had this plan for a while and it played out. Congrats. What's going on, Angel? Somebody who has made a ton of money with SoFi as well. Jose Cruz. What's going on, Jonathan? What's going on, Prableen, Daryl? See a lot of members on here today. Did a 39.23 strangle, and so far myself, only 50 contracts, but still 100. Congratulations. Congratulations, Jonathan. Are you really 1, 2, 3? What's going on? Appreciate you. What's going on, Mike D? I closed my SoFi 31 October 2539 naked calls this morning. 70 premium capture, IV crush in action, just to puts at 28 cruising now. That is awesome. Stefan, Dex, what's going on? Ed, somebody who went total degen on SoFi as well. These are the members that I do FaceTimes with, guys. So I know what their situation is with SoFi. I'm sure they don't mind. I'm not giving any specifics, but Ed grabbed a bag on SoFi as well. Strangle sounds like choking. It's just a term for options, guys. Megan Rogan, how are you? Dex, what's going on? Option investor, good afternoon. Muted, what's going on? Grateful that you're here, TJ. Love the work you do. Stefan, there will be a time when you will convert to straddles and start wheeling with leaps. Maybe. I've definitely explored that as a possibility. Maybe in a year or so. I feel like it's going to take a while for my mind to really wrap around that concept. Been watching a while and learning. Just sold my first contract today. That's awesome, Daryl. Good for you. So anyway, what I'm going to do is I'm going to present, and we're just going to show the position, how it all played out. This is all in past tense, right? Because I closed a majority of this position already. So we'll go from there. So we've already got it set up right here. SoFi is currently trading. This is the one that's highlighted. SoFi is currently trading at $30.49. And the only thing that you see open is the 3,000 short puts at 27, 28 days down the road, already up $9,400 on on that particular position. And there's $252,000 of meat on the bone. And you'll see the year to date on the right hand side, 1.593. We were negative 200. So we're talking about a $1.7 million swing on SoFi. So we're going to talk about it. How did I make this happen? So thankful to Grok, thankful for artificial intelligence, all of those things. It's going to give me a summary of all the screenshots because I documented the entire journey on X. So, they say a picture's worth 1,000 words, right? So instead of rambling and trying to figure out what's the mindset, where's SoFi, where was SoFi at, I'm just going to be able to utilize Grok to give me a brief synopsis, if you will, and we'll kind of go from there. But that's what's going on with SoFi. In a nutshell, here we have order chain. So we're able to see all of it, guys. We're able to see all of it. This is all of it. And I started this particular strangle right after the last earnings report. So, been messing around with SoFi over here since 320, right? Because we moved over from Robinhood to Tasty Trade in February. And this shows all of it, guys. This shows all of the transactions that I've ever made on this platform concerning our beloved SoFi. So it has taken some work. It's taken some work, a lot of studying the charts, a lot of studying the underlying, the fundamentals, all of that stuff to make it make sense, because some of the hardest thing, sometimes it's just real hard to make it make sense. So anyway, now that we're here, I might as well do a real brief portfolio update. I used to do these for you guys often whenever I would go live for the public. Today, now I just started going live for members only because I'm really trying to concentrate my efforts on the book, and I just trying to tune out a lot of the noise from a lot of the trolls in the chat, just because it was just better for my mental health, if you will. But what do we got going on here with the BMNR? There's 40,000 shares. Oh, we're down on the shares. We got covered calls 10 days out that are printing, and we've got 300 leaps at $75 January 2027 that we're down a little bit of money on. So we're long on BMNR. Riot, we're down to 100 contracts. I've got some more shares in a different account on Riot, and we're just letting them do their thing. But in this particular account, we've got 100 leaps at 20 in the distance, January of 27, and we're running the poor man cover call campaign. We've got these, we're selling against these leaps at $26 for next Friday. MSTR, this is my favorite position in the portfolio right now. We got 800 short puts at 220, 800 short calls at 400. So that's the sweet spot trade right there with a couple $100,000 of meat on the bone. We're already up almost 300,000. And then in the distance, I got another 200 short puts at 225 and 200 short calls at 400. So we've got a highway that we built between 220, 225, and 400. So as long as MicroStrategy cruises in between the lines, we've got another 441,000 of extrinsic value, meat on the bone. And there's SoFi. We already talked about SoFi. Amazon is towards the end of the year. Huge strangle on Amazon at 210 and 250, 750 contracts. There's $787,000 of meat on the bone. Again, this position was negative over six figures when we transitioned over, and now we're starting to manufacture the win. And these are my tax harvests, guys. I didn't have to take these losses on. I just wanted to put something on paper because our realized gains were so high. So this opportunity presented itself. So on paper, it looks horrible. Oh my God, down $1.47 million on Google, but it's kind of a whatever. I look at the extrinsic value at 2.4. So when it all plays out, I'll flip the script and we'll be up $1 million on Google. Same thing on Apple, down 1.3. There's 2.4, so we'll be up $1 million on Apple because I'll have to roll these probably 2 or 3 more times so that I can widen out the highway sufficiently so that the share price, like a drunk driver, can cruise right down the middle and I'll get to the finish line. So sometime in 2026, I'll flip the script on Google and Apple and make a shitload of money. But in the meantime, I'm very grateful for them because they are helping us out in taxes. Because you'll see here, realized gains. We got this set up for largest to smallest. So SoFi has been a real big part. TSLL, CleanSpark, Palantir, Enphase, Hood, BMNR, UNH, Riot, Amazon, HIMS, PayPal. A lot of contributors, guys. Marathon, NVIDIA, Oscar, Shop, NVO, SMCI, MicroStrategy, CRM, Salesforce, Microsoft, and the ones that have lost money on is EOSC, Soxel, Tesla, Neo, Google, and Apple. So had it not been for these, we would just be paying a lot more taxes. So I was like, well, I could show a loss on paper over here, but then I'll make it next year pretty easily, in my opinion. So that was just kind of a no-brainer for us, guys. It was just an absolute no-brainer. So that's the way that it has all worked out. So SoFi is the belle of the ball right now. Who do I think can catch it? Who do I think can catch it by the end of the year? Probably no one, because I'm going to put this strangle on again. I just want to be in this trade. I want to realize more money. Now we're trying to get to 2.5 million by the end of this calendar year. How are we going to do that? We're going to eventually add more contracts. That's one. We're going to add more contracts on the puts. And then if SoFi pumps, I'm going to go get the bag on the calls as well. But I want to be real wide. I want to be like at 27.37, something like that. Maybe even 27 and 40. So if I were to pump to like 32, 33, I might be able to sell the 40s, go grab another couple 100,000, start with 3,000 contracts. So we already got the 3,000 on the puts, 3,000 on the calls, have an extrinsic value of over $500,000. And then we'll add the 2,000 contracts as we get closer to expiration, because that's the maximum contracts that I'm able to sell on Tasty right now is 5,000 contracts per underlying. So we're going to try to get in the next 90 days another $1.5 million. So why is that important? At least $1 million. 1.5 is the goal. Happy with $1 million. Why? Because I look at it this way. We had 100,000 shares. $10 of capital appreciation is $1 million. That's the way I look at it. So whenever we did this whole move, SoFi was in that $15 range, give or take, right? 15 to 20. Now it's closer to 30. So we would have had about $1 million and a half in gains, because I was going to cut down to 100,000 shares. So we would have had that in gains right now. No tax implications whatsoever. We would just be owning the shares, buy, hold, and hope. No brainer shit, right? So I chose a different path. So I always had to consider that there was going to be 100,000 shares owned. So if that was what was on the books, I need to continue to construct the trade. That way I'm not leaving any meat on the bone except the taxes that we're paying. So how do I go get that money back? At some point, SoFi is going to go sideways. And the people that are long owning the shares, and they ain't doing shit with them. They just, oh, look at my pretty shares. I'm up a bunch of money. That's where I'm going to continue to get paid, because I'm going to continue to strangle, kind of like I did on Palantir. There's a lot of people, since it went to almost 200 a couple months ago, they haven't made any money, right? It went back down to like 160 just to go back up to like 190 or whatever it is right now. I'm looking at the little list over here. If I can find Palantir. I can't even see it on here. I guess I don't even have it on there. Oh, there it is right there. 188. But they haven't made any money. If you're not selling calls, you're not selling puts. If you're not working your shares, you're just excited to own them. That's great. That's great. You know, you do you. I'm not convincing anybody to sell puts and calls. I'm just sharing my journey with you guys. But it's been pretty easy for me to make money on Palantir and not have to own shares. You know, so I'm like, I'll just do that with SoFi. At some point, SoFi is going to go sideways. At some point, SoFi is going to go sideways. Here, made $448,000 on Palantir, didn't own one share. I took the trade off recently, made on Enphase. Where's Enphase? Made $330,000 on Enphase, didn't own one share. On CleanSpark, I did own shares for a hot minute. On TSOO, owned some shares for a hot minute. Hood, no shares owned, 257 grand, you know, on the realized side of things, right? BM&R. So it's like, well, how are you only up 100, but you got realized gains of 243? Because we've been running successful cover call campaigns on BM&R, and the premiums are pretty crazy. UNH, again, making a lot of money, never owned any shares. Amazon, we did own shares for a while. HIMS, never owned shares. PayPal didn't own shares here. Marathon, no shares. I think we might own shares for a hot minute on Marathon. I don't know, I have to double check. But all this other stuff, didn't own any shares. So there's definitely ways to make money with the short strangle. Anyway, let me get with you guys and do any live Q&A. And then the next thing that I'm going to show is the Twitter. So I'm going to see if the Twitter populates if I go this way first. I'm just practicing something real quickly. Give me 5 seconds. I'm waiting. Okay, perfect. It's there. Super. Okay, so let's do this thing. Let me get back over here. Let me minimize that. We're back on the Twitter. Now I'm over here on StreamYard. Let me talk to y'all for a second, and then we'll go through the entire trade based on what Grok has to say. And then I'm also going to put the link in the chat. I'm going to put the link in the chat because the option was was going to join me today, but he hasn't clicked the link yet. So there's the link in the chat. If anybody would like to chime in, again, I'm the channel where this isn't like the debate channel or anything like that. This is just like if you have something constructive that could help me to get better, then by all means, come on in, share your experience, maybe how you've made money with SoFi. But after we go through this exercise with Brock, I would like to get y'all's input because I'm always trying to get better. I'm always like honing in on my craft. I want to get better. I want to be the best option seller that wheels live and in color on YouTube and X. That's my goal. That's my mission. That's what I'm about. I ain't trying to be the best podcaster. I ain't trying to be the best content creator. I'm not a fucking librarian, so I'm not going to know everything about these companies. There's no money over there. There's no money over there. It's peace of mind. You want to go learn about a bunch of stuff about a company. It's important for your peace of mind. It's really, really important for your peace of mind. But that doesn't necessarily translate into being able to make money with the company. I've given y'all a mouthful there. Put it on rewind. I'll have Alex clip it for you. But learning about a stock doesn't qualify you to make money on it. You still have to learn how to position yourself to make money off of the underlying. And that's my specialty. My specialty is I know how to make a shitload of money on the Bitcoin miners. I don't know much about them in comparison to other nerds on X and whatnot. But I ain't trying to be the smartest guy in the room. My goal is always to figure out how to become the richest guy in the room, right? That's just a more fun goal, if you will, for me. Because there's a lot of like nerdy people out there and they try to like impress you with their knowledge. And that's great. That's great. Knowledge, it's great. It's exciting, right? But you can learn how to make money on the underlying. And I'm choosing a different path, right? I'm choosing an alternate route because I'm not just owning shares. That's no-brainer shit. You don't have to practice for that. You don't have to study. You don't have to do anything. Buy the shares. They go up and to the right. Boom, you make money. That's great. That's great. It doesn't work for me. Why? Because this is the only source of income. This doesn't work for me. Buy, hold, and hope doesn't work for me because I need to generate income because we live off the premium as a family. That's how it works. So it doesn't work for me. I don't have my oil field job anymore. I don't got, other businesses that are producing sufficient cash flow. This is it. This is it. So I needed to figure out income generation and wealth creation at the same time in the same basket. I don't have two separate baskets, if that makes sense. So I feel like I'm kind of one of a kind in that aspect when it comes to what I do, because this is what I do. I don't sell books and tapes. I make a couple $1,000s a month doing FaceTimes, maybe $15 a month ad revenue on YouTube. So don't really make any money doing social media is what I'm saying. I do this because it's like my philanthropy. I want to give back to people that maybe are looking for another path. Maybe they're making six figures and they have $300,000-$400,000 socked away. That's my target market. I'm like, dude, if I could show you how to go make six figures and have control of your time, that's a fucking huge flex, right? It's like, invest with Henry, right? Biceps over triceps. The biggest flex is having control of your time. It's where you spend your time, where you choose to spend your time. And I have control of my time. So to me, I'm extremely wealthy in that aspect. So anyway, let me see if I could get over here and where are we? Super OG Wrench Squad, what's going on? Dex, what's going on? Dr. Matthew, Wes, Michael Anthony, DJT, check the news today. Has been working on deal to sell by Bitcoin that's buying and telling others. Can you show us how you're using AI with options, please? DJT, Manish, what's going on? Chris, SoFi moving nicely. There's a link, guys. If anybody wants to click the link, I will definitely love to have you on here as a guest to help me carry the show today. I sold some SoFi 27 puts this morning for 11. Man, good for you. Good for you, man. Wow. Portfolio all-time high today. Thanks, DJ. Man, that's awesome, Prab. Good to hear that. Looking to start options wheel portfolio. Where do you recommend scanning for stocks? Oh man, there's so many places that people go. I used to use like Finviz, and I think it's Finviz or Fintel early on, but now it's like I wheel the same stocks over and over. So just go back on the video and screenshot those stocks on the watch list on the left hand side. Those are the stocks. Those are the stocks. Sell puts and calls on those. You'll make a shitload of money. It'll save you a lot of time. You're welcome. Appreciate you sharing your experience. You're welcome. Shout out to Young Alex. Realized profit is great. It really is, in my opinion. And the IRS likes it too, though, right? Because you're taxed at ordinary gains, and at my level, it's pretty high. So the IRS, yeah, they like me quite a bit. For risk management, what's the max portfolio margin maintenance percentage of net asset value will let portfolio go as you approach expiration of these strangles as you notional exposure increases close to expiration date? Man, it really, really depends. Like today, I go by buying power usage, right? Just to keep it simple for everybody. I did not like my buying power usage under any circumstances to climb above 75%. Today it got to 70%. That's why I didn't write this out to the end, because it was definitely going to be over 80% probably tomorrow. Because you get closer to expiration, you got to look at capital requirement like escrow, right? The brokerage wants more money to put in escrow for their protection and yours too. So they were already requiring, when we started this position, it was like $1,000,000, 800,000, something like that on the capital requirement. This morning, they were already wanting 1.7 million. That was the capital requirement. So the options buying power went from like 7 million to like 5 million because they were wanting more money in other positions that was in as well. So over the last couple of weeks, I've been trimming, right? Because I had like 1,250, some maybe even 1,500 strangles on the big three, right? Apple, Amazon, and Google. I've trimmed those down to 750. So I've given a lot of premiums back to free up the capital, the collateral, to be able to endure this move that I was doing on SoFi. But this is not going to be a normal thing for me, guys. This is kind of like a one-off. I'm the tasty trade guy. I sell 30 to 45 days out, manage 21 days to expiration, unless I just see it as an opportune time to go grab the bag. Excuse me, I got to send my buddy a text. Or hold on one second, guys. A Sorry about that, guys. That was my dear friend Randy, and I just wanted to make sure that I took his call. He's important to me, but let him know I'll call him back. So that's the thing. I don't want to exceed 75%. I'm more comfortable in that 50%. Why is that important? Is because the VIX could spike at any moment, and man, it hurts. It really, really hurts. So, being in that 40 to 50, 55% buying power usage, that's comfortable. And then I have a game plan in place, right? If shit hits the fan, the big spikes 20, 30%, because it's done that here recently, right? Over the last month or two. What am I going to get rid of first so that I could free up the cash? And then I also look at the reserves. Like as a family, it's like, hey, how much money are we able to send to Tasty Trade? Because if we really believe in the positions that we're in, we might not necessarily want to trim. We'll just send more money. So it's all situational. But for me, the rule of thumb is kind of like 50%. And I think that's kind of what Tasty Trade preaches as well. But I know I've heard Tom at least insinuate and Tony Batista insinuate that they play a little more aggressive than just 50% buying power usage. But that's just kind of comfortable for me. You showed me the way to own my time and be retired before it. Man, that's crazy. That is awesome. Let's see you and Henry on a live stream. I wouldn't be opposed to it. Henry's a lot more conservative than I am, dude. He's a good wheeler. He's a good wheeler. I just, this is a hustle for him, right? Like YouTube's a hustle. It's he makes a shitload of money on YouTube. I'm not that guy. First of all, I'm not good at YouTube. I'm probably just not entertaining enough or grifty enough, right? Whatever it is. But it's just not my thing. That wasn't my calling. But I want to be the first person that wheels, sells options with $100 million account. And I feel like that'll happen within the next 5 years. Like I really, really believe in my heart of hearts that that's going to happen. And then I'm going to turn into like a Mitt from the standpoint that there's so many contracts and the channel is just going to be watching me work all day. So you just kind of get in where you fit in. I'll have, stocks from $10 to $500, right? And I'm just monitoring the portfolio all day, and talking through it, and having guests on all day long. So that's like, if my wife allows me to continue to do this, that's where I see the vision of the channel, is where I'm like trading, 3-4 hours a day live, because it takes me that long to go through all the positions because the portfolio is so damn big. I remember when I was down 40% on portfolio post Liberation Day with TJ's help, I'm now 45%. Wow. Just mentioned Palantir. Let's go. That is awesome. Hey, TJ, does it make sense setting up an LLC to do what you're doing versus an IRA? You have to talk to your tax professional. There's this 1236 or 1246, whichever one it is. That's a tax code for like traders. There's just so many. I'm still figuring it out, guys. I'm still going on 5 years. I feel like I don't have the best tax efficiency going on yet, but within the next year, that is my goal, because this is legitimately what I do for a living now. And now I'm just like, okay, well, how can I maybe like not give as much money to Uncle Sam, because it's getting kind of ridiculous, the checks that we're having to cut as a family. I don't know. We'll see. We'll see. SoFi was good to me. So anyway, let's get into it. Let me see if I can go this way, and we click on X. I'm just checking over there to see if that shows up. I'm just waiting on, there we go. Okay, super. So you guys should be able to see this font. So I was talking with Grok, and Grok says here, TJ the Wheel Deal specializes in option selling strategies like the wheel, focusing on stocks such as SoFi to generate consistent premiums while managing large positions for realized gains exceeding 1.5 million year to date. They educate followers through detailed trade breakdowns like YouTube streams and a private WhatsApp community for wheelers, emphasizing risk management and mathematical execution over emotional decisions. Lesser known aspects includes their family office setup for licensed trading and occasional forays into swing trades and emerging tickers like BM&R. If you're awake, because this is just me. So then I interrupted and I go, show screenshots of the SoFi Strango over the last 90 days, please. And this is what it came up with. So based on recent posts from TJ the Wheel Deal, here are the key screenshots and images documenting the evolution and management of his massive SoFi short strangle trade over the last 90 days, from late July through October 2025. This trade was initiated post-earnings in July with a January expiration involving 5,000 short puts and 5,000 short calls, generating over $700,000 in premiums initially. Updates show adjustments like rolling puts, monitoring theta decay, and planning closures ahead of the October 28th earnings. I've included timestamps, brief context, and direct image links for viewing the trade positions, typically from Thinkorswim or similar platforms. So here's some links here. So July the 28th, 2025, initial massive short strangle setup. Going into earnings, 5,000 short puts, 25 strike, 5,000 short calls, 26 strike. Expiration date, sweet spot, 25 to 36 with $5,000 premiums at risk. So if I'd have just done nothing, that would have worked out and I'd have made about $700,000. But as I stayed in the trade, and I'm going to give y'all like a narrative of what I was thinking, where I was at, like in the mindset or whatever. And I looked at some of the videos during this time, some of the lives, to kind of like make sure that I'm giving y'all accurate information here. So I got my little notes over here. So initially, guys, I was like, Noto's going to get paid. SoFi is at $25, and it's going to have to stay at $25 for at least 90 days so that SoFi, so that Noto and the management team qualify for the first tranche of their performance stock unit bonus, right? So I was like, I feel like I have a solid floor for the first time ever with SoFi because I've been in this thing since it was IPOE. I feel like there's a legitimate floor. So I could basically mortgage the house over there in that $25 range. So that's how I came up with that strike price, even though it was, approaching all-time highs at the time, right? Of when it's been trading under the ticker SoFi. It had gone over $25 whenever it was IPOE, I believe. So that's how I came up with that. And then 36, it was just a valuation thing, right? I was like, man, this thing not going to go to 36. I could maybe see it touching it, but it's not going to stay there. I think it's going to happen like one quarter, he's going to get 35. The next quarter, he's going to get to 35. And then potentially the following quarter, although I'm not sold because the valuation would feel a little bit stretched at that point. But again, this isn't knowing, like, I didn't know that, like, for sure crypto's coming back. Now he's talking about stable coins. I didn't know that this lending platform was going to like really be a thing, like a driving force. I didn't really know that student loans were going to come back like new and improved, like they went to the gym, got on steroids, that kind of thing. So now it's like for this next round, I got to change my tune a little bit. I have to change my mindset. That's why I only started with the 3,000 short puts at 27. I ain't even selling calls right now. I feel like there's too much risk to the upside. Now I see a world where SoFi will for sure go to $45 by March. I stand firm there. I feel like it has to happen by March, and it has to hold that move through June so that he qualifies for whatever it is, at $300 million or whatever he's got coming his way. I'll be really, really happy for him and his family because he put it all on the line buying shares when they were really crappy, right? I feel like he was giving us the playbook, and that's why it is just so awesome to have a CEO like that at the helm, because it feels like you're in it with him, if that makes sense. It's kind of like the way that Tesla feels with Elon, that he's buying $1 billion at the market. It feels pretty awesome. So then mid-trade update, position holding strong at an average cost under $9 per underlying shares. No major adjustments yet, focusing on data collection related to overall SoFi P&L died to strangle. Then at 30 days to expiration, my brother's birthday, September the 18th, 2025, $700,000 realized on SoFi since platform switch. Goal to capture 350 more from remaining premiums, obligations for 500,000 shares on each side. So it started working because the theta was real. Then September the 19th, I decided I was going to start getting greedy. I'm going to go for $1.5 million because if we had 150,000 shares and there's a $10 move, that's $1.5 million. So that's how it got to that move. Or if we look at it like a $15 move at 100,000 shares, that's $1.5 million. So I don't want to leave any of that meat on the bone, but I want to capture a realized gain. I don't want fairy dust bullshit paper gains. I want realized gains because I feel like those are greater than paper gains, because nobody can take those gains away from you except Uncle Sam for their part on the taxes, right? And I know that once it goes sideways, I'll go get my tax money. So it's all good. So I rolled the 5,000 short puts from 25 to 27, adding an additional $235,000 in premiums. It utilized 347,000 in buying power. So now we're sitting at 27 and 36 on September the 19th. And this is where I feel like I started screwing up, because that's almost where we ended up. We ended up at 28 and 36 going into earnings yesterday. So I feel like I already had the trade, but then I was like, I wanted to keep going for it, right? September the 24th, daily update, chilling on position, more pressure on the 27 puts and the 36 calls, monitoring the VIX, etc., because the buying power was getting compromised. September the 25th, daily check, no plans to trim or roll unless downside spike. If ideal, SoFi, it's ideal if SoFi goes above $29 and I could just coast. October the 7th, the progress, 888,000 of extrinsic value left, targeting 75% capture, approximately 666,000. Plan to close half and run 2K strangles for the next 3 months, which is where we ended up. And I didn't follow that plan because right now we have what? 3,000 short puts. But now I have the answers to the test and I'm more comfortable. I'm not comfortable selling the naked calls right now because I feel like SoFi can pump. Why? We got rate cuts tomorrow. I feel like SoFi could be up more on the rate cuts news than their actual earnings, which were amazing with the massive guidance raise. But that's just the way that it is, right? Because macro is like, that's the real trend. And a lot of these stocks, they kind of go with the macro. On October the 17th, hanging tough, 2 images showing position status, expiration nears, assessing of write out possible next week. October the 21st, complex adjustment. This is just making fun of my post, right? Because it says added broken wing butterfly, jade lizard, zebra elements to the strangle for risk management near expiration. These captures highlights the trade management from setup to rolls, premium decay, and pre-earnings tweaks. For full context, check the YouTube links and recent post management, etc., etc., etc. So anyway, that's all of it. I'm just going to check my X here real quick if there's anything that live for the peasants. Y'all are trolling me already. So anyway, that's the thing. That's the thing in a nutshell. So I'm going to put the link up again. If anybody would like to join, invite guest. And I do, I go copy and then I go paste. So it's right there. If anybody would like to join, I'm going to message Lamont to see if he's available. Oh, he's going to miss today. He's way behind schedule. No problem. Yeah, so we'll try to do it again with option here shortly. But let me get with you guys here. I did this one right here. This one here. Are you doing delta strangles at 16? Not necessarily, man. Not necessarily. A lot of it has to do with where's the stock trading, and I always look at everything with like the 200-day. Like, where's the 200-day? Where's the 50-day? And then I start analyzing. I put the Bollinger Band on there, and then I'm like, if I'm going to sell a call, I want to be above the upper end of the Bollinger Band. If I want to sell a put, I want to be below the lower end of the Bollinger Band because that's a 20-day moving average. It's a 1 standard deviation from there. So it's just kind of like a real good gauge. But a lot of it just has to do with premium collection now because I'm selling puts and calls on the same stocks over and over. So whenever you're in these trades for so long, you just get comfortable with the ranges, and then I watch, the SoFi weeklies, or now I guess I'm not sure what they call it, FinTech weekly or something like that. So I watch, 20, 30 minutes of that. Teva's, Tanner put out videos on a regular basis as far as SoFi goes. So I keep up with them. Sometimes Roy Crossroads puts out information. And then I follow all these guys on Twitter as well, or X as well. So I'm always keeping up with the underlying because I feel like it's a mirror, right? Like the company and the stock price is a mirror. And I used this analogy when I first went on Amit's channel, 4 years ago or whatever it was. It's oftentimes the objects in mirror, they're closer than they appear. They don't match up, right? You see the rearview mirror in your car, and it's like that's weird, right? You turn your head and it looks different. Or they have those skinny mirrors at those real high-end fashion boutiques for women because they want them to feel good about themselves in that outfit so they can scam them out of that money, right? So I'm always looking for what's the image in the mirror? Is the image reliable? Is the image real? Is the stock overvalued? And is there a catalyst to take it to different levels? If there isn't, well, then I feel very comfortable selling naked calls up there. And then if I feel like there's like a legitimate floor, like I just felt there was a floor on SoFi at $25. So I was like, I don't have to go look at anything because I know fundamentally what's going on with the company. Because I think over long stretches of time, stocks trade on fundamentals, not technicals. In short stretches of time, there could be technical things, right? Like a golden cross or something like that, or just different things that short squeeze situations where the shorts have to cover. Like there's reasons why technically a stock can go up or down. But over the long haul, I feel like the fundamentals are going to match up with the valuation. And that's just the way that I do it. It's not really that tough in my mind. Please clarify what would happen if SoFi got bought out at 50, for example, to clarify the risk. That would be a real good. Right now, I don't have that issue, thank God, because I already closed out the naked calls. But let's just say they had announced that, and then SoFi spikes up 25%. And you have naked calls, so you have to like deliver shares that you don't own, right? It's tough, right? Because what's a cash secure put and a naked put functions the exact same way. A naked call and a cover call functions the exact same way, minus one big caveat. You're not covered. You don't own the shares yet, right? And you're not covered with cash and escrow for the naked puts. You're not covered by the shares in escrow with the covered calls. That's why it's called naked, because when you have portfolio margin, they're only utilizing a fraction of your money to make good, but they're keeping an eye on your money as a whole to make sure that you can like really make good. Or they'll be like, hey, you need to trim, or you need to buy some calls. You need to buy some calls to basically put it to cap the losses to the upside. So let's talk about that scenario. I wake up and SoFi is at, I don't know, fuck, $40 a share. What I do, the first thing that I'm going to do is I'm going to do my best to get information. I'm going to ask Grok. I'll reach out to Data Driven Investing. He's got his phone number. I'll reach out to Tevis. I have his phone number. Hopefully they hit me back. I'll reach out to Roy. I'm going to reach out to people that I trust and I confide in so they can walk me through what's the buy at, how real is it, or is this something that they're talking about? Because if it's real and somebody's ready to stroke a check, these shares are going to go to 50. I have a decision to make at that point. The best thing to do, and luckily the delta was higher on the puts than the calls. So the first move to the upside, not really going to cost me that much. Why? Because the money that I'm losing on the short calls is being offset by the money that I'm making on the short puts. But then at that point, if it's real, then in order to mitigate a huge disaster and turn a winner into a loser, the best thing that I could do is close the naked calls, give them $300,000-$400,000 back, call it good. Let SoFi pump, and then I make my money back on the short puts, and I'm still at 1.5 million. If you get stubborn, and it keeps climbing and it keeps climbing and it keeps climbing, and you think you're going to roll, but then let's just say you roll a year out because that's just what you normally do. But then what if this deal happens in 90 days or 180 days? How does that work? I'm not exactly sure. I think the broker is going to make you close those strangles or close those puts and calls, because everything's got to be real clean on the books if SoFi is going to go through a transition of ownership or whatever. So that's where it could get really, really dicey. So having been in that situation, thankfully, there were people in that situation with Twitter. Whenever Twitter was going from public to private, because Twitter was public, and then they announced what the share price was going to be, and Twitter went to that share price. I wasn't part of that trade, thankfully. So maybe Josh can speak more on exactly how that would work, because I don't have that experience under my belt. But the one thing that I do know is you don't want to fight the trend. The best thing that you could do, in my opinion, is just take the loss, especially when you have a winning side anyway. It's going to offset that loss, and you just don't make as much money as you want it to, but at least you're not losing your whole bankroll. What's another thing that you could do? You could buy calls. You could buy the shares to cover, because then now you could deliver the shares. But if it had already gone up to like 40, I have calls at 36. Well, that's a losing proposition too, right? You don't want to buy shares at 40 and deliver them at 36. And that's kind of fucking dumb, right? But you could buy them at if it went all crazy, you could buy them at 40. Then you can roll your short calls to 40, and then you just deliver them and you just hope that it all plays out. But it can get really, really dangerous, because what happens if you buy them at 40 and then it tanks back to 30? And you're like, shit, man. And that's where the game is hard. That's why investing is hard. So you have to be real, real careful. So there's a lot of people that do iron condors. That's where you sell a put credit spread and you sell a call credit spread simultaneously, because those are both defined risk trades. I'm running an undefined risk trade. So theoretically, there's unlimited risk to the downside as well as to the upside. But in my mind, I was like, well, SoFi not going to go below 25, because if it dips below 25 and closes there, the board could be really sticky with Anthony Noto and be like, no, remember that one time over here, remember at Bandcamp, and you're not going to go get your money, So I feel like it had like a concrete floor at 25. And that was the investment thesis, right? For that cycle. I was like, I think I'm absolutely golden at 25. Now we're sitting at 27, right? Because I bumped it up from all the way to 28, right? I was at 28 and 36 going into the morning. And now I rolled down to 27. Why? Because that is my base case fair market value for SoFi now, after the nerds that I have crunch the numbers and they're like, SoFi's worth $27 a share all day long right now. So that's where I'm willing to die on that hill, so to speak. Like, I don't even have to monitor that trade. I'll take ownership of 300,000 shares, more shares, because I have 250,000 shares in my 401k. So I'll take ownership of these 300,000 shares at $27, because I feel like SoFi is worth $27. And then I'll just sell aggressive covered calls, and it'll pay pretty handsomely. And I like to get $2 or $3 of capital appreciation, get rid of the shares, get back into the strangle game. So that's why I'm just only have the short puts right now. I think SoFi is too risky right now to be running naked calls, guys. It is just too risky. You've got rate cuts coming. You've got upgrades coming, analyst upgrades coming. Those analyst upgrades or downgrades don't mean much to me, but I'm just one person. It's going to matter to the market, to the masses. So as those upgrades come, SoFi is going to pump. It's going to pump. I see 35 by the end of the year. I see 45 by March. And then June, I think, of next year, I think Noto grabs the bag. A couple of other things go their way. Galileo lands a top 5 bank. They pumped out something that they're doing the debit card for the rapid rewards for Southwest. So those types of deals start coming down the pike. And then Noto is like, hey, all of the things that we're able to do, it's because of the acquisitions of Galileo and Technisys. So I think that people are going to start really understanding that, hey, SoFi was playing the long game. And then their big thing, like the big takeaway for me today was they're just focused on growing the top line revenue. So there's a lot of ad spend and all that stuff going into that. But eventually they can trim that fat, and now their earnings per share is going to go up a lot. And a lot of institutional investors like to see earnings per share, less dilution, more earnings per share. And that's where bigger money can come into SoFi. And it's so weird, guys. It's so weird. But a company like SoFi, it's a lot like Palantir and Robinhood as well. There's a world where SoFi will go from 50 to 100 a lot faster than it went from 10 to 20. Kind of weird. How does that happen? Because the big money's playing now. Because SoFi has proven itself. It's not on the rookie contract anymore. It's a seasoned pro, if that makes sense. And a lot of big money, the biggest money in the world, they only play with companies when they're seasoned pros. They don't play with companies when they're on that rookie contract, if that makes sense. Sorry, I'm late. I was selling more puts on SOFX. I think Noto articulated the risk going forward pretty well during the earnings call. The risks are less about what SoFi has control of and more about what they do not. I think that's pretty fair too, especially if you look at like Amazon cutting 30,000 jobs, right? Like, I don't know how many of those people have loans or credit cards or anything with SoFi, but let's just say 1% of them do, 2% of them do, whatever they do, right? Whatever the number is. But if there's going to be like a lot of high paying jobs and those people are going to be unemployed, and I was talking to my wife about it yesterday. I was like, I didn't always pay my bills on time when I was younger because I didn't have the consistent cash flow. So I wasn't a bad guy. I wasn't in a good position. So I was overextended. I kind of like overload the donkey, if you will, like my parents used to say. So I'm like, it's not that I'm a better guy now per se, like I have more integrity or anything like that. It's just I have good cash flow. So it's easy to pay my bills, like I was able to get a little loan with Sofi today. Uh, got the approval, got it all signed. They'll put the money in the bank at some point. I wouldn't have been able to do that a couple, even 3 or 4 years ago because I wasn't as documented financially, if you will. So I don't know what would happen if like more companies start laying off $30,000 and $40,000. I'm talking about these good jobs, right? The good cushy jobs that there's a little cause to pause there. Awesome. I'm glad. I hope I was able to articulate a little bit. I just apologize. I don't have that experience under my belt. But if I was in that situation and the stock shoots up that I sold calls on, the best thing you could do is just close the call and regroup, get more information. You can regroup. You stay out of that trade for 30 days. You got the tax harvest and it keeps pumping. Then you can go sell calls again and recoup all your money, but you're in a much better spot. But fighting with the stock is just not a good idea, guys. It's just not. Let me know if you need Sofi shares. If tested the upside of your strangle is your go-to move to buy the leap shares or just roll of untested, the upside is, yeah, absolutely. A real good question. With Sofi, the reason that I had lowered it initially to 3,000 shares, to 3,000 contracts the day before yesterday was because I was like, I could just cover. Like, there's enough money. I'll have to eliminate 500 strangles on the big three: Apple, Google, and Amazon. So I do that. I free up enough capital to where I could afford 300,000 shares of Sofi because I believe it's like 8.1 million bucks. So I was like, I'll just buy the freaking shares at like $30 if I have to. And then I'll gladly deliver them at 34. But I made $4 in capital appreciation on 300,000 shares. That's another 1.2 million, right? So I was kind of like low key hoping for that because a lot of y'all might have been freaked out, but I knew the game that I was playing, right? I was like, well, I'll just cover. And now, I mean, hell, I might even lower it to 33 or 32 just to make sure they take the shares. I get an extra couple $100,000 in capital appreciation. So that's the thing. But again, guys, just to reiterate the whole purpose of this stream, the reason that I don't want to own that many shares in this particular account right now is just because the drawdowns are really, really massive. There's Josh in the chat. I don't know anybody else that owns more shares than this dude in Leaps. And I'm pretty damn sure he has he's got really, really big swings in his portfolio right now. Because it's just mathematically impossible not to when you have such concentration in one underlying. So I was just trying to eliminate some beta from the portfolio. So I needed to find another way. Just needed to find another way. And I feel like I found it. So I want Sofi to pump. I wanted to pump to like $45. And then at that point, I'm kind of hoping that it chills out because I need a couple of rounds of strangles to go get my tax money back, right? Because I was short-term games the whole time. So I need to sell a couple more strangles. So buy, hold, and hopers are going to make more money than me initially. But I'll catch them. And then when I catch them, I'll pass them because I know how to make money on the underlying. Like right now, there's just so much money to be made on Palantir. I just got out of that strangle because I needed to free up capital because it was all hands on deck on Sofi. Anyways, I hope y'all got some value out of it. I got to get rocking and rolling. I got some FaceTimes and I still haven't eaten today. I hope y'all can notice that I have lost a little bit of weight. I am going, Monday was 28 days. So I guess I hit a month without a soda, guys. That is like such a big deal to me. SoFi has been my demon. It's been my devil. It's been a demon that I had to exercise. It's just really, really bad for my health. I got diagnosed with chronic kidney disease. I'm at stage 3. My GFR levels are at 46. I'm 50 years old, so it's just not good. Bottom line is, it's not good. So I had to take my health seriously. Got to drink the water, and I'm even considering some stem cell stuff in Costa Rica. I'm looking into a clinic over there here in the next year. Like this, I got to get ahead of this thing because it just gets worse and worse. And before you know it, you're on dialysis or you need a freaking transplant. And I ain't trying to go down that road. So whenever I got the bad news a couple of weeks ago, I took it seriously. And I was like, this is the only life I got. I ain't a freaking I ain't a freaking cat. I ain't got 9 lives. I don't believe in reincarnation. This is it. This is it. So I got to make the most of it. I had a real good run with sodas. I was able to drink them probably since the age of 2 or 3 to 50. So that was a pretty damn good run. Will I ever drink sodas again? Probably, but no more than 1 a week. So it's going to be like an absolute the special occasion of the week. But if I see that 1 a week turns into 1 a day, I ain't going to do it. But right now, I'm trying to go strong. What's the goal? Right now? I'm trying to make it all the way to Thanksgiving. I have a real hard time believing I'm going to go through a Thanksgiving lunch, dinner, watching football a day and not have a soda. So that is the goal. Let's go. What? Let's do a little homage to Amit right now. Let's put the portfolio back up there so we can look at the ticker. You know how Amit does this on his channel all the time, right? Let's see if that shows up. Let's see if it shows up. There we go. There we go. In fact, we'll go over here because it's bigger on this side. I'll go trading. So let me make sure I got the right one on. No, that's the wrong one. It's this guy. Whoa, what did I do? Where's 6? Here we go. There we go. SoFi. Boom. 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 Look at that year to date, guys. 1.6. Holy shit. I am so glad I do not have naked calls on right now. I am so glad I don't have naked calls right now. I want this thing to pump. I want everybody to make money. I want Josh to make money. I want Ed to make money. I want my boy Albert, love me some Albert Pitar to make money. These are like the big, the guys that I know have huge positions. Angel. I want all of you guys to make a shitload of money, data driven, Tanner, Tevis, Crossroads, everybody that's making money on SoFi. I want you guys to crush it. I want this thing to go up to 34, 35 bucks. And then I'm going to go play with some naked calls. So I'm going to go shit on the parade a little bit. But I want to sell these naked calls at like 37, 38 to where I'm like a little bit comfortable because what do I think is going to happen legit? After the rate cuts and stuff, I do think that at some point SoFi is going to see 35 bucks with the Santa rally. And then it's going to have to hold 35 for 90 days, guys. So that'll be real, real fun. So I could see me itching this strength. I could see me going from, we went to 27 from 28 to 27. I could see me eventually getting greedy and creeping it up from 27 back to 30 and going and grabbing that bag. So before I put on naked calls, the first thing that I would likely do is roll the puts up. I'll roll the puts up to like 29 or 30 and go grab more money that way. And then I'll let SoFi do its thing and I'll follow it up with my puts. And then I'll put on the naked calls. But I'm not going to do it right now because I feel like I'll get annihilated. I'll absolutely get annihilated. This BM&R trade, guys, I'm excited about this one right here. 40,000 shares. The calls are printing a little bit. And then we got the leaps. I bought 50 more today. So I got 300 leaps. I'm actually trying to get to 500 leaps Yesterday, I don't know what the intention is, because at some point I do want to let these shares go so I can free up a shitload of capital. But I want to have 500 leaps before I do that. The Riot trade has just been absolutely amazing for me. The MSTR, this one is just printing. We're up 291,000 year to date, guys. I do think that it's going to be above 220 and between and below 400 by the end of the year. I just feel like that's going to happen. So I'm super excited about that. And I feel this one, maybe that one doesn't happen, but I could easily make adjustments. And thankfully, it's only 200 contracts. So the bulk of the contracts is over here. I will roll these out another 2 weeks and try to again capture more realized gains. And then by the end of the year, we'll be sitting on 1,000 contracts, possibly even more, depending on what the buying power situation is and stuff. And there's the Sofi trade, and then Amazon. Right now, it's at 750 contracts. It'll probably be at 1,500 contracts by the end of the year if we're able to get some more deposits in. So if we are able to get some more deposits in, I will have the buying power to double this position on Amazon, and I'm going to go grab the bag. Or the other way that I could do that is I can minimize these right here. I can minimize these by 250 contracts each, and that'll get me to at least 1,250 contracts over here on Amazon. And I want to again realize that. So that's what's going on in a nutshell, man. It's been absolutely awesome talking with you guys. I do got to get rocking and rolling. I appreciate each and every one of you guys. I hope y'all made a ton of money. I hope y'all like this journey. I hope y'all have enjoyed the whiteboards. I hope y'all have enjoyed the whiteboard presentation as well. I like doing those little 5-minute videos where I can just kind of like go over the entire anatomy of the trade, kind of give you all the gimmies and gotchas for the actual trade at hand. I appreciate the 2,000 people that have seen the link on X, the 87 people that are rocking with me live on YouTube, but I do got to run. TJ the Wheel Deal signing off. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.